Hi, I'm Bobo. In this week's recap, a number of major banks and investment groups forecasted further decline for Hong Kong's home prices. One group, CLSA, predicted that home prices would fall by another 17%. So taking into account the 17% fall from its 2021 peak, home prices will drop by 34% overall. It's worth noting that the market is anticipating the month-end release of the policy address, which may introduce favorable measures for the property market. However, CLSA said that even if the cooling measures are reduced, interest rates have not peaked yet, which may affect sales. To mitigate this, developers may offer 15 to 20% buyer discounts to stimulate sales. A number of new developments were originally scheduled to launch this month. However, we're already halfway through October, and so far there's been nothing, so it seems that we'll have to wait for the policy address. That said, Emperor International uploaded its sales brochure for South Sky, a redevelopment project in Aberdeen. This is a single tower offering 110 1- to 3-bedroom units, with 1-bedroom flats comprising more than half the units. These flats range from 286 to 325 square feet, with an estimated completion date of March 2025. According to the developer, the project will be available for sale within this month at the earliest, with no less than 50 units for its first round of sales. Prices will be based on those of neighboring developments, but the first price list is reported to be relatively affordable. It's possible that the details of the first price list will be announced before the policy address, so keep an eye out for that. As developers slowed down project launches and in the absence of large-scale new transactions, the market saw a rise in late transactions of first-hand developments. Over the weekend, the market recorded about 16 first-hand transactions. Among the projects, the Arles in Fo Tan sold 2 units. Including the units sold last month, the development has now sold 23 units, meaning there are 438 units left for sale. Meanwhile, after nearly 7 years, Nanfeng's Island Garden project in Shao Kei Wan finally sold its last available flat by tender on Monday. This was a 4-bedroom special unit measuring 2,105 square feet in size with 2 car parks. The unit sold for 45 million Hong Kong dollars at about 21,000 Hong Kong dollars per square foot. As for the second-hand market, transactions of Hong Kong's top 10 blue-chip housing estates remained sluggish. The city's 4 biggest real estate agencies recorded only 4 to 7 transactions for these estates as sales continue to hover in the single digits. Some of these transactions came from buyers concerned that home prices would rebound following the reduction of spicy tax. In other news, some housing estates continue to record losses, so let's check out 3 of those cases. Our first case comes from an upper floor flat at Amoy Gardens, where one owner faced a 7-year loss. This was a fully renovated southeast-facing 2-bedroom unit in Block K, measuring 378 square feet in size. The original owner put the flat up for sale in August at 5.7 million Hong Kong dollars, which was later reduced by 650,000 Hong Kong dollars. That's an 11% discount. The flat was eventually sold for 5.05 million Hong Kong dollars at about 13,300 Hong Kong dollars per square foot to a first-time buyer from outside of the district. The original owner bought the unit for 6.1 million Hong Kong dollars in 2020 and held it for 3 years, losing 1.05 million Hong Kong dollars, which indicates flat value depreciation of 17%. Our second case comes from City 1 Sha Tin, which also recorded a loss. This was a southwest-facing 2-bedroom unit with garden views. Measuring 327 square feet, the unit sold for 3.88 million Hong Kong dollars at 11,800 Hong Kong dollars per square foot. The original owner bought the flat for 5.35 million Hong Kong dollars in 2018 and put the flat up for sale 3 months ago at 5.1 million dollars, below the original asking price. The owner further reduced the price by 1.22 million Hong Kong dollars, marking a 24% discount before they sold the flat. Including additional expenses, the original owner faced a loss of 1.47 million Hong Kong dollars, but it's estimated that the actual losses exceed 1.6 million Hong Kong dollars, indicating a depreciation of about 27% over the 5-year holding period. Our third and final case comes from Classical Gardens, a low-density luxury housing project in Tai Po. This was a lower floor, 2-bedroom apartment in Block 11, measuring 513 square feet in size with swimming pool views. It was originally put up for sale at 6.9 million Hong Kong dollars, but the owner eventually reduced the price by $1.7 million. That's a 2.5% discount, and sold it for 5.2 million Hong Kong dollars at about 10,100 Hong Kong dollars per square foot. The original owner bought the flat for $6.68 million in 2020 and held it for 3 years, booking a loss of about $1.48 million. The actual loss is about 1.8 million Hong Kong dollars if we include additional expenses, indicating a flat value depreciation of 22%. That's all for this episode. See you in the next.